Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 913A, and today's date is March 8th, 2016, and the title of the episode is IMF Calling for Immediate Action Before the Global Economy Completely Collapses. Let's get right into the economic collapse financial news. Now, as we know, the economy is continually declining. We're seeing retail contract. We're seeing people in these retail markets being laid off. We see major corporations coming out and saying, yes, we're laying off these people. And as we know, during an economy that is recovering, where more people are getting jobs, according to the government, the economy expands. But we're seeing the opposite of what is happening in this country. Even though the U.S. government is trying to convince us that everything is fine, we see that whatever they're telling us is the opposite. And if we look in Texas, we know they've had a lot of people laid off in the energy sector. And we're starting to see that retail sales in Texas, they're declining. Now, sales tax, the collections of sales tax, they don't capture every retail sale, but food products like flour, sugar, bread, and vegetables, they're exempt there. Motor vehicles, well, they're reported separately. And the data is not seasonally adjusted at all. And it can only be compared year over year. Sales tax collections lag sales by 1 month, with collections reported for February representing sales that occurred in January. And it's raw data. It's not based on estimates or surveys or opinions, but on dollars that people actually spend. And it basically gives us an unvarnished glimpse at what is really going on. And the retail sales boom in Texas first tripped up in June and August of last year, when sales tax collections, they started to decline year over year for the first time since March of 2010. Then in October, collections dropped to about 5.4%. In November to 3.3%, December 1.0%. In January, for December's crucial holiday sales, collections fell 3.9%. And now the Comptroller's Office released data of sales tax collections in February, and they plunged 6.8%. It was the fifth month in a row of declines. So, where we saw the consumers continually spending throughout this bubble time period that the central bankers created, we're starting to see that consumers right now, they're not spending. And this is noticeable not just in Texas, but in many of the states where we're seeing the same exact thing. And we just reported yesterday that the credit growth has slowed dramatically. People are tapped out. People have lost their jobs, their high-paying jobs. Now, when you go from a high-paying job where you bought your house, your car, you have a standard type of living where you know your bills, you know the income coming in, when you lose that job and you have to take on 1 or 2 part-time jobs, that income that's coming in is never enough to support what you once had. This is why we're seeing delinquencies in car payments. This is why we're seeing people leaving their homes once again. This is why we see foreclosures picking up in many different areas. And this is spreading across the country. And we see from all these statistical illusionary numbers that are supposed to convince us that the economy is improving, it is not at all. We see small business optimism. It has crashed to 2-year lows. Actually, the last 14 months have seen the biggest slump in small business confidence since the financial crisis. Even though we've been told that the recovery is incredible, we're seeing the opposite happening everywhere. And it doesn't fit into what the government is telling us. And this is why the government decided to put certain programs into place to try to bring in more and more revenue, because they understand that people are going to be losing their jobs. They understand the income bracket is going to drop. That means revenues are going to drop that's coming into the government. This is why you see Obamacare. This is why you see FATCA. This is why they're trying to implement a carbon tax. This is why we're seeing all of these taxes at this point in time. And under FATCA, it really has become impossible for small business to expand internationally. Because as we know, this new legislation punishes any foreign entity that does not report what an American is doing overseas. This single law is causing an implosion in the world economy, and our government employees, they don't care if it's destroying the entire economy, as long as they get their piece of the action and they're getting paid off. Actually, most of these government employees have no idea what's really going on. All they care about is their bottom line, their pocketbook. And we're seeing a massive swarm of Americans resigning their citizenship because they cannot live or even conduct business overseas without U.S. taxes. Even when they have nothing to do with U.S. whatsoever, they're still being taxed. And this is not helping the situation at all. Now, the Baltic Dry Index moved up again. It's at 366 points. And we're noticing that the index is moving higher because of higher rates. Higher rates for shipping iron ore, cement, grain, coal, fertilizer, and many other different raw materials. And we can see at this point that the global economy, it's actually not improving. And this is why the U.S. government, the central bankers, the ECB, they've been calling for a cashless society. This is why they're looking at negative interest rates. They're very nervous about what is going on in the global economy. They realize things are deteriorating very, very quickly, and they need certain things in place, and they need to make sure that people do not take their funds out of the banks. And we can see with what they're doing right now, they're trying to control the entire situation. Now, the Italian banking system is completely collapsing right now. The Italian banking stocks have declined a whopping 28% since the beginning of 2016. And the biggest Italian banks, it looks even worse for them. And this is what a financial crisis looks like. Just like we are seeing in South America, the problem in Italy appears to be accelerating at this point. Italians already are taking their funds out of the bank. Slowly, quietly, and they're pulling billions of euros out of the banking system. And if these banks continue to crumble, this quiet stealth run is going to be a major bank run. And we see that Italy would then, if these banks collapsed, would then spread to Spain. It would spread to Portugal, spread to Greece, to France, and it wouldn't stop there. It would keep on going. It would affect the derivative market, and everything would start to fall apart. There are many things that are occurring right now, just like we saw back in 2008. Everyone believed AIG was fine, Lehman was fine, Bear Stearns was fine. And then, of course, we find out later they were in major trouble. And believe me, there were many others that I'm not going to go through every single one of them. But we can see the same thing is happening at this point. We see Deutsche Bank, we see the Italian banks, we see the banks in South America. And there are many companies here in the United States, banks here in the United States, that are in major financial trouble. They're just hiding everything at this point, pretending like there's nothing wrong whatsoever. Now, the Internal Revenue Service is looking to hire private debt collectors for outstanding taxes. And Senator Charles Chuck Grassley is one of the main supporters of this effort, claiming that these companies can help bring in some of the billions in overdue taxes owed by Americans. It's roughly around, as of mid-2015, the people of the U.S. owe about $380 billion. Now, this is not the first time this happened where the IRS went outside to use private firms to collect debts. It happened in the past. And they're realizing that those people who had their own businesses, those people that are working, that got laid off, that owed the taxes, they don't have the income coming in anymore to pay for the last year's taxes. And many of these people who never found a job, who've fallen off, lost their house, got their car repossessed, and it makes it very difficult to do anything. And a lot of these people, they can't even find, because they're living in tents, they're living with relatives, they're not living the way they used to live, where they had their own house, their own car, and things like that. We saw this back in 2008. The same thing is happening once again. And this will accelerate, it will increase. As you notice, there are more and more people falling off the job market. We can see that a lot more people are having very difficult time surviving. And as we go forward, I wouldn't be surprised if we saw debt prisons come back. I wouldn't be surprised if we see an IRS type of police force trying to collect this money. We already see that they're going to be hiring out these private firms to try to get some of these funds, because the IRS usually puts liens on your property, tries to get a portion of your paycheck, but if there's nothing there, there's nothing they can do. And this is the problem they are having at this point. And at this time, this situation is not going to improve. People are not just going to all of a sudden get jobs. All of a sudden, the economy is not just going to repair itself, where everyone starts to work. This entire economic system we're in now is a dying system. It was created by the central bankers. It was run by the central bankers. All of these bubbles, all of this debt was created by them. And this is no fault of everyone out there. You have been brought into this system, brainwashed into this system, to think this is normal. This is not normal. This is the central bank system. They want you to think this is normal. They want you to think being in debt, paying taxes is normal, but it is not. This is not what our founding fathers wanted, and this is what we need to change. Now, the IMF has basically bolstered their call for action against the global economic collapse of the entire system. And they're calling on governments, leaders, to expand efforts, including fiscal and monetary stimulus, and urgently needed structural reforms to support growth. They're saying that the most recent projections for growth may no longer be applicable because of all of this capital from emerging economies being pulled out of the system. And we're seeing a sharp contraction in global trade. And they're making the call that something has to be done, because what's happening right now is we are sliding into the abyss. They know it. And they're trying to do whatever they possibly can to keep this system alive. And they just need a little bit more to pay off some of this global debt. But guess what? It's just not out there. No matter what these leaders and countries do, they will not stop this economic collapse. They might be able to cover it up, but they will not be able to stop it. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.